Hello and welcome. This is Brandon Wendell, Chartered Market Technician, and I'm going to go over the Nifty and Bank Nifty for some just education observations and some analysis I'm doing on those. So, looking at the weekly Nifty chart, you can see we are still retracing here. Last week, obviously, had a big sell off and moved down to 38.2% retracement. We still have lots of bearish pressure, so I'm not sure we're going to stop there. It looks like we could keep continuing downwards to the next level, which would be the 50% retracement of 16,455.50. Going down to the daily time frame, I'm not sure why my RSI got cut off there on the bottom there, but I apologize for that picture. Anyway, extremely bearish and below 40 on the RSI, which means that we are still continuing down. You see the dotted line that was a demand zone from last week that was actually violated. We went through that area of demand and look like we're going to be continuing downwards into the next area of demand. You can see we're not going to stall. We might get a little bounce at this 16,962, but ultimately after a little bounce, I think we're going to continue down to the 16,705.20 pretty easily. That's our next demand zone and just above the 50% retracement. Moving into a smaller time frame from the Nifty, and by the way, this is a downtrend now because we have lower highs and lower lows, so we're in a daily downtrend, and it's confirmed because we have rallies that can't get above 60, and we do go below 40 on the RSI. And hold on, let me go ahead and fix this. So I decided to go to the live chart here. You can see on the chart of the Nifty on the daily, I want to be able to see the RSI. I got cut off of my pictures there for some reason, but you can see we're extremely bearish moving down, and it doesn't look like we're going to let up anytime soon. So if we go down to the 4-hour time frame, I'll go back to the pictures I have here. Again, lower highs, we actually hit the area supply, and I believe that's what I had charted last week, was showing you that area supply. We're continuing down. We have another rally that could not get above 60 on the RSI, so extremely bearish. If we get any kind of bounce, it's only likely to take us up to the 17,421 before we continue down once again to 16,722. So once again, if I take us out to the chart and go down to the 4-hour time frame, you can see the RSI is pointing downwards, making fresh lows. So that's suggesting this bearish trend will continue to the downside until we reach that area of demand that I just mentioned. So going back on the 60-minute time frame, we can't really fine tune anything here. We haven't really formed a new zone. We do have drop, base, 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 and then we started moving down, but this has not actually become a supply zone yet to be able to trade. Something we'll watch because we have tested other zones up above. Once again, going back to the live chart, and by the way, there's a demand zone there at 16,722. So if I do take this down to the 4-hour time frame, 60-minute time frame, we were on the 4, and we clean this up a little bit. As I mentioned, in order to be able to call this a supply zone, we would actually need to have 2 follow-through candles after the leg out candle. So that's how I define these. And right now, all we have are drop, base, base, base. There's our leg out. We have not even no first new low. So we need to have 2 new lows after this on the 60-minute time frame to really call this a good area of supply, but it's shaping up to be something like that. So we'll keep an eye out for that 17,127 as a possible bouncing point. If prices were to start rallying a little bit, that would come back in and kind of push it back down once more. So going into the 15-minute time frame, well, we got the 17,217. I think that's about the same area. We have drop, base, drop that started forming. We kind of stair-stepped away from that as well. And again, just lots of bearish pressure right now on the Nifty that looks like it's going to continue. So if I go back to the 15-minute time frame, that's the area I just drew on the higher time frame. We don't really have any kind of supply here on the lower. We just have it a little bit higher right there. You saw that one I marked on my chart earlier. Drop, base, drop. So this is actually the one that has not quite formed yet from the higher time frame, and that's what we got to keep an eye out for. So if we do keep moving down, let's see. Well, we've had a bit of a correction already, so let's just see if we use the Fibonacci extensions from the beginning of the move down, and this was more of a running correction that we had. That gives us projections of 16,915 for a possible stalling price. Not necessarily a good balance, but a stalling price. And remember, the demand was just a little below that at 722. So if we go a little further, let's see, do we have the 100%? No, took those off. So let me fix that. There's the 100%, and we also want the 127.2. So actually right here, the 100% duplication of the preceding impulse lines up almost identically with that area of demand that I mentioned at 16,722. So we're at 733, pretty much right in the area there. So that's a high probability target spot. Let me put in a horizontal line there. And let's see if it'll bring me down. There we go. Like I said, we can go back. I believe this was not on the 15-minute. It was on the 60 for the demand. We have to go back quite a bit here to find it. There it is. And yeah, it's part of a gap that's going on here. So it was the area before we gapped up. Doesn't look so good on the 15-minute, but in the 60-minute, if I go back there, should be able to see it. There it is. Pretty much have, well, doesn't look quite like a zone. Maybe it was the higher time frame because it doesn't quite qualify there. Although you did have the pause with the gap and big bullish pressure. So obviously we keep an eye out for this and maybe take some profits off if you're shorting at that area of 16,733 that I was just mentioning, because that would be the Fibonacci extension, basically duplicating the previous impulse down. So that being said, I'm going to move over to the Bank Nifty, and hopefully those aren't cut off, but I'm not sure if they did. I forgot to check them. Nope. Picture got cut off too. That's okay. On the retracement that we've been going through, you can see with the Friday sell-off, we went even further than 50%, moving down towards 61.8, or even to the demand zone way down there at 33,175. So we'll see how bearish we get on this, but we are not below 40 yet on the RSI, so it's not in a completely bearish trend yet, although it's very, very weak, obviously. Looking at the daily chart, we're approaching a demand zone, 35,768, but we are well below 40, as you can see here on the RSI, so that's suggesting that demand will not stand and that we could break through that area, maybe bounce just a little bit and stall, but eventually go through that demand, seeking out that weekly demand. So lots of weakness going on. It'll be interesting to see if this develops as a supply zone on the daily as well, because we have drop, basing, and then drop. It all depends on the follow through that happens here. But that can end up becoming a pretty good supply zone around 37,000. Continuing on to the 4-hour time frame, we actually do have a zone that formed. Actually, it's not drop based drop. I thought it was. It's rally based drop. So the whole thing really should be included, with the bottom line at 37,343, top line about 37,800. So we are approaching a demand zone on the 4 hours as well. Remember, on the daily, we had demand 768, and it's pretty much the same area. Instead of 768, 692, just a little higher, but that whole area is a demand zone that you saw on the 4 hour and the daily. It should be watched for a possible bounce. We do have some positive divergence developing. Notice the RSI is not as low as it was before. It's not confirmed yet because this has not been confirmed as a low until you put in a higher low and higher high on a candle after it. So we're definitely seeing some possibility of a bounce coming very soon. And I would say that it most likely would happen at 35,692. Could drive us back up right into 37,343, because that'd be a great opportunity to short once again. Dropping down to the 60-minute time frame, the last week's video featured this Fibonacci extension, and as you can see, we actually bounced right off the 61.8. So hopefully you were able to take some profits there if you were shorting, because that's where I predicted the first bounce. And you can see the second bounce was at the 1.618, or 161% of the previous impulse, and we bounced pretty well back up. We're not going to use that anymore. That was for last week. So as you can see, we now have this impulse retracement, and we're currently impulsing down. We're approaching the 127 for the next Fibonacci extension. We only stalled the 100%. We gapped beyond the previous one. So this is a possible bouncing point for the Bank Nifty right around 35,875. And there's a demand zone that's just below that as well. You're looking at the 15-minute time frame. We have another possible move down, retracement, and it lines up. Notice we have correlation between two different independent Fibonacci extensions lining up in the same area, giving a little more strength to that 35,800 area, almost 900. So keep an eye out for a little bounce. If we do get a bounce, I'm looking for new shorting opportunities, not looking to go long. We do have a supply about 36,500, but we may stall out somewhere around 36,250 if we can't go all the way up to that original move. As a matter of fact, if we go back to the chart on the Bank Nifty, there we go. And let's drop down to that 15-minute time frame once again. Oh, you know what? No, 60. We're dealing with trends here. You can see my notes from the Fibonacci extensions there from the video, or the slides I did. But what I want to do is clean this up first of all. You know what? Let's clean it all up. Oh no, I want to keep those zones. But what I wanted to do is throw in a Fibonacci extension because we technically started from this high. This is an impulse correction, impulse, and we're waiting for a correction that might be happening soon. And wait a minute. There we go. I needed that one. Because if we do end up getting all the way down to that area, the correct way to note the Fibonacci extension would be that the end of the move should actually be there. And this would be your correction point. So I need to adjust this if it lets me. There we go. And that'll give us some possible targets, but also the retracement value should be going from really the beginning of this move down here to the bottom of the move, which we may, and again, I'm not saying it happens, it's happening, but I'm anticipating it should bounce at that area. And now we have some possibilities of where it might go as we pull back. So when I drop down to the 15-minute time frame and get rid of this for now, clean it up a little bit, what I'm expecting is a bounce at that area. Remember, we had two Fibonacci's lining up right here at 35,873. So I'm expecting a possible bounce there. And if we do bounce and pull back, let me check something. Good. Then you have possible short entries at any one of these Fibonacci levels. And then, of course, our target would have to be adjusted based on where it retraces. So it only retraces 38.2%. And then your very first target would be, keep an eye on the demand zone, obviously, but then your first target would be 35,095. If it happens to retrace deeper and hits the 50% or 38%, then you would expect the target to be 35,244. And of course, again, if it keeps going a little deeper, I don't expect it to go more than 50% because we have a strong downtrend going. But then your target, if you sold at this 50% retracement, target would be 35,355. So that's what I got going on right now for the Nifty, starting off for the week, and also the Bank Nifty. If you have any questions, let me know. I'd love to see you hit that subscribe button so that way you can follow me and get notifications as soon as the new videos go up for the week. And I'll be posting some supplemental ones during the week as well. Until we meet up again, trade safe, trade well, everyone. Take care.